Halo pemirsa, langsung dari studio IDX Channel Jakarta, saya Fajar Wayong hadir dalam Market Review, program yang mengupas isu-isu penggerak perekonomian Indonesia. Dan jangan lupa live streaming kami bisa Anda saksikan di idxchannel.com. Dan pemirsa, mari kita ikuti Market Review selengkapnya. Dan pemirsa, hari ini kita akan membahas tema menarik tentunya, dan ini tidak jauh-jauh begitu ya dari soal IPO, bagaimana kemudian kesiapan perusahaan dan juga exit strategis. Dan saya sedikit membacakan pengantarnya terlebih dahulu ya pemirsa, di mana facing the complexities of today's business landscape marked by macroeconomic factors such as geopolitical changes, high interest rates, and tight liquidity, companies must adapt and focus on sustainable growth. In this challenging environment, exit strategies such as IPOs and M&As have become crucial considerations for business looking to unlock value and build long-term resilience. And M&As are not only strategic moves for growth, but are often an integral part of the IPO journey, helping companies strengthen their position before going public. An IPO is a transformational event. It requires crafting a compelling equity story, establishing good corporate governance, building robust systems, process, and having the right people to meet market expectations. And to explore deeper about this, we have Bapak Sahala Situmorang, Strategy, Risk, and Transaction Leader, Deloitte Indonesia. Good morning, Pak Sahala. And Jasmine Maranan, Capital Markets Advisor, Deloitte Indonesia. Good morning.
Selamat pagi.
Okay, selamat pagi. Okay, for today's theme, exit strategies from IPO to M&A and beyond. Maybe before we explore deeper about this, our viewers really curious about the background or maybe the specialization of both of you. Maybe I start from Jasmine. Could you tell our viewers what you do at Deloitte?
Okay, thank you very much, Fajar, and it's good to be back here again with you. My name is Jasmine, and people call me Jazz, and at Deloitte, I help drive the end-to-end IPO solutions. So I work with different teams across different functions and also across different geographies in Southeast Asia, primarily to help companies prepare for their listing on the exchange, may it be in the Indonesian Stock Exchange or the US and other regional markets. And that's how we help companies prepare for their life as a public company and also life after being listed.
Okay, for the company and life after being the state. And Pak Sahala, what is your area of specialization?
Okay, thank you, Pak Fajar. So I'm Sahala, Sahala Situmorang. I am leading the SRT business unit. SRT stands for Strategy, Risk, and Transactions. So we are helping companies crafting their strategy and also help them managing the risk and also assist them in doing the transactions. So definitely M&A and IPO is part of the things that we are doing at the SRT division or business unit.
So both of you work together to help a company to become IPO ready?
Yes.
Absolutely.
So how about maybe a little flashback for the first half in Indonesia? Maybe we can you can share about us what's the situation in Indonesia in the first half and the current state of the play of the Indonesia landscape, maybe from Jasmine.
Yes. So more broadly, I'll talk about the Southeast Asia position. Then it is a subdued environment, right? So in terms of the number of IPOs, as well as the deal size and also the market capitalization, it was not as robust as we would have expected when you compare it to the prior period in the last year. Now, zooming in on Indonesia, among the Southeast Asian exchange, it appeared that Indonesia had the most significant drop or decline in terms of the deal value. There were no jumbo listings that we have seen back in 2023, but we are very confident that these will just be temporary. We also see that the energy, the consumer sectors, as well as the healthcare, they're still driving the trading volume as well as the value on the Indonesian Stock Exchange. And we feel that these sectors will remain robust and that there will be focused or renewed interest from investors, both from the public and private markets, particularly in the consumer, healthcare, and energy sectors.
Okay, I read the data from Deloitte Indonesia from the presentation that you shared before. In Indonesia, IPO in the first half is slightly lower than last year.
Yes.
But how Deloitte sees it in the second half of 2024? Is Deloitte still optimistic on the IPO situation in this year, Pak Sahala?
Yes. Definitely yes, Pak. Because based on historical performance, Pak, the second half is always better than the first half. That has always been the case for the last 5-10 years. So zooming in into Indonesia case, Pak, because currently you see that every time I talk to investors, they are very, very optimistic about Indonesia. Probably for the first half because of the political condition, the election. People are still at the wait and see kind of condition. But I've been talking to a couple of players, couple of investors. They are preparing for the IPO. So definitely I'm very optimistic about the capital market in Indonesia for the second half, Pak.
Okay, and Deloitte is there to help the companies to become an IPO ready. Okay.
Certainly.
Okay, Pak Sahala, what do you see in the M&A and divestiture space? Is it common for a company to carry out these corporate actions prior to an IPO?
Yes. Okay, that's interesting. I've been actually helping a lot of clients, Pa, doing couple of, we call it corporate actions before the IPO. I can name 3 corporate actions. First is the M&A. Companies are doing M&A before the IPO. Actually, they are trying to grab new market. So they are trying to increase market shares by doing certain M&A. So they are acquiring company in order to get new market, increase their market shares. So the revenue growth can be better in the perspective of the new investors when they are going IPO. Okay, the second thing, Pa, the divestiture. Certain companies are doing this actually to get rid of the non-performing assets. Probably we can give the analogy of cutting out your fat before you are going for the IPO. So you are slimmer, like you are more efficient. So that's the thing that companies are doing before they're going IPO. The third is actually the joint ventures. Couple of companies are trying to do a JV. They are trying to partner with another company to get more capital or to get a new way of doing things, so new technology, they can do that also. So I have seen companies doing acquisition or M&A, doing divestiture and doing JV before doing the IPO. The main objective, Pa, is to be able to be more, to be in a better performance before they're going IPO. Because IPO is once in a lifetime kind of activities. So they want to be very, very ready before going to the IPO.
Okay.
It's a long story, but long answer, but hopefully answer your question.
There are some steps that can be taken by the company prior to an IPO, and IPO is a transformational event, like I said before, so they must be ready for it. And then I still have many questions for Pak Sahala and Jasmine, but we have to break first.
Okay.
Dan pemirsa tetaplah bersama kami, Market Review segera kembali usai jeda. Dan pemirsa kembali bersama kami dalam Market Review, dan tentunya ulasannya masih tidak berbeda begitu ya dengan segmen sebelumnya terkait dengan exit strategies from IPO to M&A and beyond. Dan kembali kita lanjutkan diskusi kita bersama dengan Bapak Sahala Situmorang, Strategy, Risk and Transaction Leader Deloitte Indonesia, dan juga Ibu Jasmine Maranan, Capital Markets Advisor Deloitte Indonesia. And I will go to Jasmine. We know that 2024 is a global election year, and there are macroeconomic challenges, macroeconomic headwinds, and high interest rate is maybe one of the biggest note in this year.
Yeah.
How the companies navigate this market challenge? How must them navigate this?
Yes, thank you for that question. Very interesting. Well, companies are trying to refocus and adjust their sales, right? And trying to rebalance their portfolio and making sure that they have stronger balance sheets. And as Sahala has mentioned, some companies would actually do some divestiture of non-core assets. And that's how they could bring cash to their balance sheet and really focus on even strengthening the position. And some companies can actually engage in mergers and acquisition, and based on companies that I talk to, they actually do some kind of roll-up acquisition where they will acquire small companies and then put them together. For as long as these businesses are right fit for their business, then they will capture the synergy. And as you mentioned, it is a quieter time now as compared to the prior year. Most of the companies and conversations that I have with owners and founders, they are really looking at preparing the company for these corporate actions, particularly the IPO. So that's when they are trying to strengthen their infrastructure, building their systems, their processes, in order to actually be prepared when the market opens.
Okay. Pak Sahala, what about you?
Okay, interesting.
Yeah.
I think, Pak, the market has always changed, right? And you cannot really change the market. You just have to follow the market. So in relation to this IPO or M&A, I think a lot of companies now doing the dual track. So dual track, Pak, is actually they are preparing for both M&A and also the IPO, just to get ready when the market condition change. So actually, but the dual track is not completely different. The preparation is almost the same. So as Jasmine mentioned, the preparation is pretty much the same. So you have to get your company ready for the new investors. But towards the end, it's a bit different. The M&A and then the IPO is slightly different. On the valuations, on the target investor that you are trying to approach, that is the difference. But I think this concept of dual track is very important, particularly when market conditions is like it is right now, very difficult to predict. So that is actually the way you are taking charge of your corporate actions is actually, one way is actually doing this dual track.
Okay, in the midst of these challenges,
Yes.
they still have to brave for those actions, M&A, or maybe the other corporate
IPO.
actions, including IPO. And then, Pak Sahala, you've done numerous M&A, both from the sell side and from the buy side. Could you kindly share what are the investors' key focus areas, which some of our viewers may be thinking about acquisition and divestments as part of their growth story?
Okay, what are the investors looking at, Pak?
Yeah.
Definitely, Pak. I see three things here. One is actually they are trying to see also the companies who has a very clear strategy. So this strategy has to involve also the growth strategy. Of course, the investors would like to see that the company is growing, of course, growing sustainably. The second thing is they wanted to see a reasonable forecast. Reasonable forecast meaning that this forecast in line with the historical performance and also in line with the industry growth. The third thing that investor would like to see is the how the company take care of their risk also, how they manage their financials, how they manage the internal control, the governance. Quite important for the investors. So those are the three things, Pak, that investor would like to see.
Okay, investors would like to see three things as said by Pak Sahala. And Jasmine, you also have been involved in numerous IPOs in the past 20 years. How was the investors' preferences evolved? Have their taste buds changed?
Absolutely. Their taste buds have changed. I've been doing IPOs for the last 20 years, and I've seen the cycles go up and down. Prior to COVID, we've seen the traditional and conventional models, right? More established companies going out public. Now, during the advent, and this is particularly true in 2020 and first half of 2022, you've got the new economy sectors coming in, and therefore the investors have a more increased appetite in terms of risk, and they're focusing really on the top line and really, exponential growth of these companies. But after the second half of 2022, there have been some dismal performances, especially from the technology sector. And therefore, what happened was the appetite of investors have changed, and they are now kind of like going back into normalcy, looking at companies who are more established and still having a solid revenue growth. That's still very key. However, they are now also focused on the cost structure of these companies, and also looking at something that's, very clear path to profitability. But most investors really prefer profitable companies now, as well as sustainable cash flows, right? So there's positive cash flows. And if I may add, especially now in this landscape, we've been talking about machine learning capabilities, or what they say, Gen AI. So these things, to me at least, advanced technology could actually help companies in terms of boosting their top line, right? Where they could actually do some, make customers be sticky to their products, the use of apps, right? And also there's this increased interest for companies to demonstrate the sustainability practices. So the pillars of E, S, and G. And therefore, these ESG as well as advanced technology can be embedded in the strategy for the long term. Of course, it may be investment and cost, but investors might have to really look at these things on a long-term basis, because they would definitely create, capture, and deliver value.
Okay, the preferences only applied in Indonesia, or it's globally, or maybe in Southeast Asia is similar? Pak Sahala, Jasmine?
They're definitely applicable on all fronts, on all regions, and it may be more pronounced and mature in some of the regions, say the European economy, but definitely investors globally, regionally are looking at these themes.
Pak Sahala?
I would agree, because I think now it's very difficult for us to say Indonesian investors or regional investors, because it's
mixed all.
Yeah, it's a borderless world now, Pak. So global investor also invest here. Global investor can invest anywhere, Pak.
Okay, we got it. We take it as a note. And last week, Deloitte and IDX has had a workshop with the theme IPO readiness, taking control of your journey. So zooming in on the IPO readiness part, how long is the preparation time? But wait, we will continue the discussion after the break. Dan pemirsa, tetaplah bersama kami. Market Review akan segera kembali. Dan pemirsa, Anda masih bersama kami dalam Market Review, dan kembali kita diskusi terkait dengan exit strategies from IPO to M&A and beyond, dan tentunya masih bersama Bapak Sahala Situmorang, Strategy, Risk and Transaction Leader Deloitte Indonesia, dan juga Ibu Jasmine Maranan, Capital Markets Advisor Deloitte Indonesia. Jasmine, last week Deloitte and IDX had a workshop with the theme IPO readiness, taking control of your journey. So zooming in on the IPO readiness part, how long is the preparation time?
Well, that varies from one company to another. Some companies are more mature than the others, but I would generally say that the preparation would normally take between 12 to 24 months, and that is because there's a lot of things that needs to be prepared. For example, some of these private companies, they don't have reporting cadence, and therefore, in terms of the financial reporting, they would actually prepare and close their books typically normally between 10 to 15 days, but these needs to be accelerated, which could probably result in 7 to 10 days. And best practice would actually say 5 to 7 days, because as a public company, you would need to report to the Indonesian Stock Exchange as well as to the OJK in terms of their annual reports as well as the quarterly reports. And also there will be a preparation in terms of governance, internal controls, and really building the infrastructure, and also competencies and capabilities, and having the right team to actually drive the process. Again, as you mentioned, it's a transformational event. It can't be delegated to only one department. Usually there is a myth that this should just be done by the accounting and financial reporting teams, but actually it's not. You will have the FP&A, the corporate strategy, corporate finance, and therefore, if I look at it, right, and I do an analogy, an IPO is like a symphony, an orchestra. There is someone who will be conducting it, a strong IPO leader, but at the same time, the music needs to be in harmony. They will have to make sure that the tune is perfect and harmonious in order to reach a common goal. And as Sahala said, IPO is just once in a lifetime. You have to make it right the first time.
So, Pak Sahala, what do companies need to prepare to be an IPO ready?
Okay. In line also, Pak, with my previous comment, what do investors look at? Right. So I think investor would like to look at the strategy. So I think in what company needs to prepare is actually a compelling equity story. Compelling equity story means a strategy which has to be different with your competitors, because you don't want to be a company which has the strategy is similar to the other. So I think being different is very, very important. So that's the first thing. Second thing, Pak, also in this creating an interesting equity story, Pak, is how you can put that also into the numbers. The financial projections have to be reasonable, but also clearly indicate a strong growth. That is very, very important. Again, I mentioned, as Jasmine mentioned, the third one is actually how your the enablers are helping the company also for this IPO. So we have to be able to indicate how the governance, how the internal control also ready to support the growth of the company. Because investor doesn't want to see a company where there could be a significant risk there. Hence, the implementation of this strategy is not very, very clear. So with a strong internal control, strong governance, the investor can be confident that this strategy can be implemented well in the company.
Okay. So from your experience, Jasmine and Pak Sahala, what is the most challenging part in helping company to be IPO ready?
Well, based on my experience, the time that really it takes for companies to get ready for the audits, that's the most challenging. So normally, the auditor will sign off on the financials, and it takes a bit of time in order to get that signed off. And a few cases where the numbers and the closing of the books are not really that fast, and therefore that actually can derail the transaction timetable. And also, from a governance perspective, companies that I have seen, they are kind of like, it takes time to get the right board of commissioners and directors, and setting up the remuneration committee, the audit committee, and other committees that are required for a public company. So that must start very much a lot early in order to ensure a smooth timetable and meet the IPO transaction timetable.
So that's the most challenging part from Jasmine.
It is. That's what I would say.
From my experience, Pak, if I can use Jasmine analogy on the music,
A symphony.
The symphony. The difficult or the most challenging part, Pak, is actually how to make sure that everybody is going in the same direction, at the same direction, same time. So timing is important also, Pak. Because, for example, like the brass section or the other section, they are going at the different time, or it will be very, very bad. The objective is actually how to create a symphony of music that can be easy to listen, nice to listen for the investors. So we have to have this all parts of the company going to the same direction, following the leader, if you like. That is the most difficult or challenging part.
Okay, that's the most challenging part from the experience of Jasmine and Pak Sahala. Yes. So we already know what must be prepared by the company, how long the preparation time for the IPO. So what are the key factors of a successful IPO? Jasmine?
Okay, let me start. So key success factors will really be to have the IPO readiness assessment, start that early. And then I would say second will be clearly a good project management, in order to ensure that everyone is up to date with what's happening in terms of the IPO objective, and also communication. That's very important. In any relationships, in any events, in any undertaking, strong communication skills, that would be very important. I think that would be my top 3 in order to have a successful IPO.
To make a successful IPO from Jasmine, Pak Sahala?
I also answered this the same questions, on our event last week. So I also have 3 things for the successful IPO, Pak. One is preparation, Pak. Second is preparation, and the third is also preparation. Because I cannot stress more on this preparation, because some companies are take it too lightly, I would say. Based on experience, actually, the key is actually preparations. To have a successful IPO.
To have a successful IPO. Also, preparation is the most important thing. And I'm sure that our viewers are really curious, want to know about the IPO and what after the IPO. But unfortunately, our time is limited. Pak Sahala, thank you. Pak Bu Jasmine, terima kasih banyak sudah bergabung bersama kami. Nanti kita gali lebih dalam lagi di next opportunity. Thank you, Jasmine. Thank you, Pak Sahala. Dan pemirsa, tetaplah bersama kami. Market Review akan segera kembali usai jeda.
Kementerian Keuangan telah resmi membuka penawaran untuk